hearing me and watching me. This is Simply Stocks, and I'm live with another live session with you all. And today I will talk to you about the markets and a couple of stocks, one in the mid cap domain and one in the small cap domain, which looks attractive at these levels from a 4 or 5 months point of view. And during this festive season, could do exceptionally well. And the charts are also showing that the movement of the stock could be pretty good. So that's what I'm going to discuss today. Uh, Hopefully, more people will join in, and so we'll have the discussion done in earnest over the next 5 7 minutes or so. I hope your investment journey is going well, and you're also trading. You can say showing a lot of strength. Below 17,500, there is a lot of buying that is coming in. So we'll discuss everything. We'll discuss about the markets, these two companies, and I'll answer your queries as well. So, very good morning to you and welcome to this live session on Thursday morning. Vikas, hi. Hope you are doing well. So, as far as other things are concerned, as far as sports are concerned, so we have the India Australia series upon us, and that's now into the second T20 international, which will take place on the 23rd. And we have other events as well. The Pakistan England series is on, and both India and Pakistan lost their first matches of their respective series. Uh, Hi there, everyone. So, hi, Plot Animals, good morning. Anirudh, a very good morning to you. Krush, hello. Uh, Okay, regarding regretting exiting in KPIT. No, I'm not. And I think what one should understand is that whatever you are buying into, you need to be sure about why you're buying that stock and what is your time frame with that and what you feel the targets could be there. See, whenever you exit any stock, there's always a chance that the stock will continue to go higher. So yes, that is always the case. Very good morning, Vipul. So I'll definitely answer all the queries later on as well when we complete the session with the two pointers that I mentioned. So in terms of sports, as I mentioned, India is going to take on Singapore and Vietnam, if I'm not wrong, in a triangular football tournament that begins on the 27th. We have the international windows opening up from the 24th. We have the UEFA Nations League that is taking place, and there are other friendlies that will be taking place. In terms of hockey, the thing is that India's women's team are now India's women's hockey team are now eighth in the world, which is pretty good. It's a notch up from ninth about a couple of months back. So they have gone up one notch. The men's team is settled at around fifth. I think they are fifth in the world at the moment. So that's good. The women's cricket team is doing extremely well in England. And we saw yesterday Hamanpreet Kaur scoring a big 100. And earlier, Spriti Mandhana scored 100. And so both the matches India have won. India have won the series. And this is the first time England have lost a bilateral one day series. Apart from Australia, they've lost to anyone over the last 15 years since 2007. So that's a commendable effort. So a lot of things going on along with what the market is doing at the moment. Market is uh, pretty strong. 17,500 has held on. There are many stocks making new highs. There are many stocks going on circuits, groups of stocks going on circuits, going up and making money for investors. Yes, there are other stocks that are not performing in IT and pharma. A lot of stocks are not performing at the moment, but there are a lot of companies which are performing and in which people are making money. So let's get going with the session. Let's talk about the markets first. So right now the market is around 17,500, 600 levels. It has dipped, and which was pretty expected. It was really expected because of the kind of, you can say, 75 basis point hike and the kind of commentary we have heard from the Fed. So hopefully these things will subside going forward. I think maybe 1 or 2 weeks more, and we'll see things pretty much even better for the markets, because October will be a very upon us days at the end of October. I am expecting a big rally from October onwards in the market, and hopefully it will continue till New Year and post that, but till budget. So there could be this could be a precursor to a big rally, all this consolidation that is taking place rather than a collapse. So I feel 17,500 on the market should hold on. Mid and small cap may show some correction for a few days, and then they'll also perform. So I think all said and done, I believe 18,000 could be upon us post Diwali, and new highs by next year is a possibility by January or so. Uh, I believe that because of the conditions in US and with the higher rates, they are more willing, or the large investors there are more willing to put money into EMs, and with the kind of economic growth, or at least in growth in the companies that are listed in the market, is going to show. I mean, many investors would come in. In my opinion, I think this is the best time to get into the markets and buy into good quality top notch companies on correction, definitely. On bad days, on any day in which the market is down 1 to 2%, that's where you would like to get in. Or if you have looked at specific stocks, then it's better to wait for them to go down 8 to 10% and then buy into them. uh, Talking about the stocks, so these are the two stocks I have brought to you, and these are down from the highs, big time. These are down 30% from the highs, and at least 30% from the highs, and are in a situation where the numbers are set to be much better in the October, and especially in the December and March quarter, it would be even better, and going forward. So the first one in this list, and in these two stocks, is the Jubilant Foodworks. I believe Jubilant Foodworks, the way it is behaving, and not going below 590, I think it's a definite buy. I think 590 should hold, and this is headed to new highs over a period of 1 year. But I think 800 is a definite possibility. In fact, in both the stocks, the target is 800, but the stock is trading at different, you can say, price levels at the moment. So Jubilant Foodworks around 630 rupees. It's a buy on at current levels, and on dips to 610. Your stop loss will be 590, and we are looking at a massive move. I think we are looking at 790, 800 over the next 4 or 5 months. By the time winters are over, we could see the stock around 800 or so. uh, and if you can hold 1 year, I think with the IPL season in March, it could do even better. So over the next 1 year, I see new highs in Jubilant Foodworks, because a lot of apprehensions with respect to the new management coming in, and a lot of things happening. I think that is now past, and so we are looking at a situation where the stock may just continue to perform, and then people will have FOMO at around 670, 680, and they'll in FOMO they'll buy above 700, and then the stock will move even higher, and those who will miss out will buy at the top. So it's better, I think, with a strict stop loss. It's a clear stop loss at 590. You can buy Jubilant Foodworks at 630. On dips, you can buy more at 610, 615, and just hold on to the stock over the next 4 to 5 months. So that's a stock that can give you around 30 to 35% in 5 6 months. Another stock in the consumer domain, but in different industries, Ecrisil. It is a smaller company. It is a company with a lower market cap, if I may say. It's around 2,000 crores, or under 2,000 crore market cap. Yes, uh, slightly riskier bet because it is volatile in nature. But around these levels of 645, 646, with 1,700 crore market cap, it looks extremely good, because this time around the sales could be around 500 crores, 500, 520 crores. So it could easily trade at 5 times sales. We could see 900 again on this stock over the next 1 year, but over the next 6 months, I think 750 should be the 780 to 800 is a possibility by January, February. Again, a stock that should be bought at on slight declines, not at these levels, 670 levels, and then you buy. So wait for either 660 levels or for it to go beyond 670 levels to buy into the stock. So Acrysel is my second pick. Target 800. Stop loss for you here also is around 590. You can keep a stop loss at 580 here. I think it should not go below 600, but around 620, 630 one can accumulate Acrysel. So both Acrysel as well as Jubilant Foodworks are a buy at current levels and on dip. So these were my two picks for the next 4 to 6 months, and would love to hear from you as to what you feel about these two picks and whether they can perform with the all right. So these are the two stocks that I mentioned are buys with strict stop losses around 585, 590. uh, it's Acrysel, not Crystal. It's Acrysel, Acrysil. So it's Acrysel. So kindly check that out into kitchen appliances, etc. That it is into. Okay. Is it good time to get into Bajaj Finserv? Any time is good time to get into the Bajaj twins if you have a longer term time frame. Short term, I could say that you may get it 4 or 5% lower, but one should be having 2 to 3 year time frame on most of the companies that you're getting into at the moment. You never know that although charts suggest that 17,400 may not break, but once it does, we could see major downside. So have a 20% in Nifty Bs, that's the query. I believe if you have a fairly longer term time frame, say a time frame which ranges between 4 years and more, then yes, 20% into Nifty Bs is fine. But if it is less than 4 years, then it's better to get into specific stocks and buy into them and probably ride the momentum there rather than buying into Nifty Bs that much. Probably you can have 10%, 5 to 10% into Nifty Bs then. Okay. Uh, See, Abbott, I need to check. I have not followed the stock that much, but if it is surging, it's better to take 20-25% profits. If you're getting 25%, it's better to book that if you have a shorter term time frame. So it's around 17,900, 18,000 levels. Uh, See, it has supports at lower levels around 16,500, 600. So what you need to do is probably keep a, if you have a shorter term time frame, keep a stop loss around 17,000, and move will kick in into Abbott. So it looks like it may break out, but wait for 18,300 levels to be taken out to buy into it. HCL Tech, I would say avoid. Get into, even if you want to get into IT, get into a TCS at 3,000. If you want to buy large cap IT, otherwise, at the moment for 3 4 months, I would say avoid IT stocks. Okay. So Tata Elxsi is looking interesting. So basically, I what I feel and whatever knowledge I have is that what is happening in Tata Elxsi is a consolidation phase. So what happened was consolidation around 9,000, 8,800, 8,700, and it might just go on the way of a breakdown rather than a breakout. So I have a feeling that in terms of Tata Elxsi, it's better to avoid at these levels. If you have it from very lower levels, then you can probably hold on and don't do anything. But if you want to buy afresh, I will not suggest that you buy here. uh, Wait for a clear signal as to what happens. It is trading around the 50 DMA. It may very well collapse towards the 200 DMA, and even then it will still remain strong. So if you get it around 8,000, yes, good levels to buy, but otherwise avoid. Another thing is that numbers have been pretty good for quite a while, 1 quarter here and there, and the stock could collapse 15-20%. So not a buy now. That's my call on something like Tata Elxsi. BEL, see, if you are holding from lower levels, yes, continue to hold. Fresh buy, I won't suggest in many of the, you can say, defense names at this moment. Once you see the defense stocks correct 15-20%, then you probably get in. Otherwise, don't just chase the momentum and buy at highs. That's my call here. So DVs look good. DVs look attractive here. Again, long term, something like Tata, something like Tata Consultancy, Divi's Lab. These stocks do look good, but you should have a 3-year plus trade into larger pharma or larger IT companies. Things could go up and down. It could work out. It may not work out. But long term, yes, valuations very attractive at Divi's Lab. Okay. Okay, what's the call? So Sona Comstar to me is expensive and has always remained. Better to buy into high value stocks at this point of time. So I won't suggest you buy now, even if the stock looks like that it is lower from very high levels. That's the call. HDFC Life, if you have a fairly longer term time horizon, like you buy life insurance, if you have that type of time horizon, then you buy. Otherwise, avoid such stocks. That's the call. So Avental, I have not looked at for stock has been doing. So let me open up Avental and then have a look as to where it is. You have bought it at 170, it's at 280. So you've been making decent money. So a thing here with defense stocks is that if you have bought into them at lower levels, continue to hold till elections, probably at least a year down the line till end of 2023, and then take an exit. I think it could just continue to perform. It has been in range bound for a while, but the stock has done exceptionally well since the pandemic. So once it was over, it has done very well. So it's a hold for the moment. If you want to really keep a stop loss, you have bought at 170, probably keep a stop loss at 250 here. 250 is 200 DMA nearly there. So 250 is your stop loss, and keep on holding, trail your stop losses. Maybe you'll see 360 and new highs in the next 6 months on something like Aventel. So that's the thing. So AKI Vipul, I would say it's a very good long-term buy. The way the charts are behaving, I won't say that in 1 year is going to do something very interesting. I don't know why it is falling. It's trading at 9 times earnings, not trading very expensive. Yes, it's a buy, but I'm not sure that 1 year would give you the best returns in it. It's a very good 3-4 year pick because of green energy and the way India is moving towards it. I think you just buy and hold it 3 years and see what happens. This could be a multi-bagger AKI. Okay. LTI is better, Rajiv. I think LTI at these levels on declines can be bought, but again, be careful in IT. If you want to trade, avoid IT. That's my call. Similarly, in Kaplan Point, Viji, a very interesting stock, very reasonable stock at very good valuations, decent company, very good business, but the stock is not performing. So if you want to buy fresh, don't buy. If you have it, hold on to it because the business is good, numbers are good, valuations are good. It's just that once the pharma comes into the picture, it should perform. So that's the call there. That's my view on Captain Point. So basically, my point here is that you buy into companies for shorter term if you want to make money in companies where the momentum is there and the numbers are going to be good. In IT and pharma, and even in some chemicals and export oriented, say textile, etc., things aren't looking that great because of the conditions in Europe and US, and it's not going to be rectified very easily. So it's going to take time. We are still seeing rate hikes. It could just continue till May June next year. Across the countries we are seeing rate hikes. So be careful with export oriented stocks. They will be frustrated over a uh, 1 year period. So that's the call. So my view on Fine Organic is that it's a very decent company, but now the stock has run up. So probably wait for some sort of declines to buy Fine Organics. I've talked about a year and a half back as well, but now the stock has gone up a lot. So not at these levels, I would say that you buy. All right, thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it, and kindly subscribe to my Patreon network. Thank you.